This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 31st, 2016. Euro dollar. So the euro largely remains under pressure after breaking down below 112, and the focus is now on next key support at 110.58, which guards against more significant support at 108.23 further down. At this point, look for any rallies to be very well capped ahead of 114. Sterling dollar. So cable has seen a nice little bounce in recent trade, though ultimately while the market holds below 147.70, the pressure does remain on the top downside and there is risk for another topside failure. At this point we would need to see a break back above 147.70 to suggest that a more significant base is in place. Dollar yen. So dollar yen has been confined to a broader downtrend, though the market could be looking to compromise this downtrend if it takes out key resistance at 111.89, which represents that previous lower top. But inability to take out 111.89 would keep the pressure on the downside and open the door for the next major downside extension, potentially back towards 105.55. Again, today it's going to be important to see whether the market takes out or stalls ahead of 111.89. Euro Swiss. So Euro Swiss ultimately remains very constructive with the market being well supported on dips. Look for any round of setbacks to be well supported, this time ahead of 109.55 in favor of the next higher low and break back above 111.30 and towards that yearly and multi-month high at 112 further up. Aussie dollar. So Aussie is seeing some consolidation finally after taking out the 200-day moving average and breaking down to fresh multi-day lows. At this point, rally should be very well capped into that 74.15 previous support now turn resistance area, with a lower top side out ahead of a continuation to the downside, eventually towards the 2016 low at 68.27. Dollar CAD. So dollar CAD has been showing signs of a major base, with the market now looking well supported on dips and poised for the next upside extension beyond 31.89 and towards 135 further up. At this point, look for any setbacks to be well supported ahead of 27.72, with only a breakback below that level to compromise this outlook. Kiwi dollar. So Kiwi has largely been trading within a bearish trend as the market trades off those 2016 highs at 70.54. At this point, rallies should continue to be very well capped ahead of 69 in favor of the next downside extension towards next key support at 65.46, which guards against the 2016 base at 63.47 further down. SPX 500. So the S&P 500 has rallied all the way back towards that 2016 high at 2112, and a break above will open the door for a retest of the 2015 record high at 2133. At this point, it's going to take a break at a minimum back below some recent support in the 2085 area to take the immediate pressure off the top side, while ultimately a break below 2020 would be required to strengthen the possibility of some form of a medium-term top and accelerate declines. Gold. So gold has traded back down in recent sessions all the way back towards some key previous resistance turn support in the 1200 area, but ultimately while the market holds above the 1190 previous resistance, we should see another, or expect the possibility for another bounce that takes us all the way back up towards those recent highs in 2016 just over 1300, and eventually beyond that 1307 peak from 2015, with the market seen heading up towards 1400. Again, the market has been under pressure, but look for setbacks to be well supported ahead of 1190 in favor of the next major upside extension.